Welcome back everyone to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, the market has tried to make a comeback, but it has not been a sweeping comeback. But the good thing has been that we've been able to hang above the 200-day moving average of about 16,992 at this point of time. We were mostly in the green territory, but over the last half an hour, we have given up some of those gains have turned negative now for the day. But if you look at the global cues, US stock futures were quite supportive. They had rallied earlier in the session and indicating a positive start for the US markets, as well as the rupee. The rupee has, Santo, halted its decline against the US dollar and appreciated a little bit marginally, of course, given the context of the quantum of fall that we have seen has been a very marginal rebound, but rebound indeed. But I think the negativity that we have seen in the last half an hour, Santo, has been coming from the reports emerging from global media that Indian bonds actually will probably not be included into the global bond indices as the market was probably hoping for, and that inclusion may be deferred to 2023. So I think that's why, Santo, I think we have seen a little bit of dampening in the sentiment.
Well, at this point, I don't think it's anymore about India's fundamentals. The entire plays on the rising dollar, and that clearly is an overhang on the markets at this point in time. Also, given the sell-off that we've seen in small and mid caps over the last few sessions, that has also been a bit of a...
That has gone under the radar in a way, if you look at it.
Except for those people who are actually holding on to those shares, I guess there's not been really... the fall of the Nifty and Sensex is what has made headlines, because clearly it's a big number out there, and Nifty at this point is struggling to stay above the 17,000 mark. Now, CJ, most likely we could see activity getting very stock specific in the coming days. We are just on the cusp of the earnings season, and I guess at this point in time investors will want to wait and watch what managements have to say about their commentary. I think that is going to be the key thing.
I think, Santo, with the earnings season again coming, investors have less time to focus on other issues probably than, given that earnings will probably dominate how we move ahead. Of course, commentary is going to be something very, very crucial, because it's been another quarter where global macro headwinds have again come back. We'll have to wait and see what the commentary will be from the IT sector, from the banking sector, from a lot of the export-focused companies, and then wait to see whether we see any downgrades to earnings or not. So far, investors are still expecting at least 10 to 15 earnings growth, 15% earnings growth in FY23. Whether that sees any sort of downgrade, I think that will determine how the market behaves going ahead.
Well, that's it. Let's move on to the stocks on our watch list this afternoon, starting with Divi's Lab. Now, the stock has been under a bit of pressure after its first quarter earnings. There was some disappointment both on the top line as well as on the margins. Operating margins fell to a multi-quarter low, but now since then the stock has then been moving in a narrow range. Probably it could be a time to have a fresh look at the stock, given that the overall outlook on the API segment is quite positive. It is expected to grow at a compounded rate of at least about 6% between now and 2030, and mainly this is due to the back of advancements in API manufacturing. And let's not forget, the government is also doing everything at this point in time to incentivize API companies, and besides we also have the China plus one factor. Besides that, Divi's Lab is trying to develop some new products which it will be entering into contracts from FY24 onwards. Its CCS business, which is custom chemical synthesis business, that was under pressure, but now with new capacity addition, probably you will start this year. This is FY23 will be slightly muted in terms of volume growth, but once the capacity start going on stream from FY24 onwards, we could see a kicker there.
Well, Santo, I think in the near term, clearly margins will be what will be on the top of the mind of investors, because if you look at Q1 earnings, margins was the biggest culprit for the sort of reaction we saw from the market, and even in Q2 I do not expect that to change, given the fact that realizations in the US market has likely been quite muted over the September quarter. Apart from that, of course, the EU business will also face a little bit of headwind given the ongoing issues there, with respect to the economic slowdown, higher energy costs. We have to wait and see whether the EU business is also suffering, because those will be two growth engines that will probably be, a little moderate for Divi's Lab. The stock has been flattish in a very weak market. I think you have to give credit to that. the fact that a lot of investors are seeing it as a hiding spot at this point of time in the market, and which is very curious given the fact that when the markets were rallying, Divi's lab was nowhere to be found at that point of time. So I think this will be an interesting stock, but a lot depends on what happens, in the September quarter earnings and what the commentary of the management will be going ahead. Well, the first stock on my radar today is Route Mobile, because this really came out of the blue given the fact that largely we have been talking about earnings downgrade only and outlook downgrade from not only companies in India but globally as well. But the stock surged today on the back of surprising commentary coming in from the management with respect to their optimism for FY23 Santo. They had earlier indicated almost 50% growth in top line in FY23, and despite that indication, the stock had already tanked more than 20-25% for 2022. But now, in an interview to CNBC earlier today, they indicated that they were very, very confident of meeting that 50% and in fact inching towards the 60% level as far as revenue growth is concerned. So that is something that has really boosted the outlook or the confidence of investors with respect to Route Mobile, and I will not be surprised given the sort of correction that the stock has taken, and given the fact that the risk reward is very, very attractive on this counter Santo, I would not be surprised if this stock remains in action in the coming few sessions.
Well, the slide in the stock price has been a bit intriguing because the growth in top line as well as in profits has been quite stellar over the last couple of years. The stock peaked sometime in October 21. In fact, even before the company reported really blowout earnings for the whole of FY22, and since then it's been struggling, it's been coming off, and I can't find any answer to that. That makes me wonder what is it that the market is not happy with, and now you have the better guidance as well, and the stock doesn't really seem to be reacting to that.
I think, Santo, what may have happened is that given the success of the IPO with Route Mobile, I think there was a lot of excess gains that were built into the stock, and of course probably investors are already priced in almost 5 years, 10 years ahead of growth in a window of nearly 1 year. So I think that is why we have seen a long consolidation phase in the stock at this point of time, and I think investors still believe that any sort of upgrades will still only be in line with the view that they already held almost a year ago. So I think it will take time. I think once this consolidation phase is over, then you could see probably if the current pace of earnings growth continues, then you could see investors probably giving higher multiples to Route Mobile. But at this point of time, I think the consolidation phase is likely to be continuing, and maybe bargain hunters in the market will look at it as a buying opportunity.
Well, next stock on my watch list is Indian Energy Exchange. Now, this stock was the darling of the market last year, but
much like Route Mobile.
Exactly. But for the last few quarters now, the stock has been under pressure, and over the last week in particular, when the market sentiment took a turn for the worst, IEX was among the stocks which took a real beating. It's fallen. It was somehow holding above 150 mark for a while, but in the sell-off, it's now fallen below that. It's almost at a 52-week low now. Now, trading volumes on the IEX, IEX has a near monopoly situation at position, but at the same time, it's not been able to grow its volumes meaningfully for the last few months now. So competition clearly appears to be snapping at its heels, and the kind of incentives that the new entrant HPX is giving, and also some of the existing rivals, that is somewhere probably beginning to hurt. And according to IFL, the stock is fairly valued at about 37 times FY24 value, FY24 estimated earnings, and that's where the catch is. The company now needs to show that it can actually grow volume. The management is quite optimistic about it, but the market doesn't seem to share that optimism, which is why probably you're seeing the stock price slide in this market.
Well, Santo, I think if you look at while the market may be probably not be as optimistic, I think that it has not affected the stock's performance, has not affected the management's optimism. They remain still very confident that the market share that they have lost recently after the entry of some new rivals in the market, in the power exchange market, they are very confident that they can win back that market share very, very easily. Apart from that, as far as the volumes are concerned, they have indicated that the second half of FY23 will definitely be much better in terms of volume growth, largely because of course now they've been allowed to bring longer dated power contracts onto their exchanges, so that is something that will benefit them, and as well as they're expecting a good amount of volume coming from the day ahead market trading that they're expecting that they have recently launched. So clearly there are good amount of triggers here, plus with coal supplies easing, power capacity improving, I think that itself will also result in a higher amount of trading volume. Apart from that, I think given, the story with IEX is also similar to Route Mobile in the sense that a lot of optimism was built in very, very quickly, and I think now what investors are probably waiting for is execution on that optimism. And I think probably right now the stock will remain in a consolidation phase, Santo, but I think in the long term this is one stock that probably is one of the big bets, the thematic bets for many investors, not only retail but also institutional.
Well, there's also the overhang about the commission that energy exchanges in general are charging, and we still have to see a verdict on that.
Yeah.
There's some fear that probably if it is capped, then that could further dent the earnings.
Yeah,
of
I think that
Indian
remains, of
energy
course, an
exchange.
overhang, but I think generally with volumes going up, probably even that cap, because this seems to be more of a volume play at this point of time than a margin play, and we'll have to wait and see how the industry dynamics develop going ahead or evolve going ahead. Well, the last stock on my radar today is Greenpanel, and this is a very interesting stock because it's largely a big beneficiary of the depreciation that we are seeing in the rupee. Greenpanel has about exports of about 80%, but its revenues are around 100%, so it tends to be a net gainer as far as the depreciation in the rupee is concerned. Apart from that, even in the domestic market, it's still seeing very strong demand for medium density fireboard Santo, and this is largely because the demand for ready-made furnitures in India has not really declined despite us moving out of the pandemic. Of course, during the pandemic, people were buying a lot of furniture because of work from home. People were setting up their own small offices inside their houses. But even despite people coming back to offices in a large way, demand for ready-made furniture has not really gone down. And I think I would ascribe that to largely because home improvement has been picking up. You can see that in the volume growth for Asian Paints in the previous quarter. And overall also, this is one stock that benefits from the resurgence that we are seeing in real estate sector. And going ahead, I think Greenpanel is one stock that is ought to be in a lot of people's watch list in this market.
Again, like Route Mobile, good performance there, CJ, almost a 60% year-on-year increase in FY22 top line, but that somehow isn't still converting into investor enthusiasm for the stock. The stock is still about close to about 30% off from its peak. Again, good balance sheet there. The company has managed to bring down its borrowings. The cash generation has been quite good. CJ, how are you stumbling on the stocks which are doing well financially, but somehow the market doesn't seem to be very enthused about it? And what's the reason for that?
Market goes through periods when it underappreciates everybody because it tries to when there is a bull market, you even overestimate even the laggards, and when it is a bear market, you underestimate even the outperformers. So I think that is what we are seeing at this point of time. But also, fund managers and investors wait for opportunities like this. These are the sort of dislocations that you look out for in the market when you're trying to look for, for multi-baggers, as they say, or asymmetric gains, as they call it. So I think that is why even I'm going by earnings trajectory, I'm going by sort of research that is coming out from brokerages, and you can see that fundamentals have not really deteriorated as much as the price has, and sometimes price damage may not be the true reflection of the actual fundamentals.
The last stock on our watch list this afternoon is Mahanagar Gas. Now, the government appointed panel to review gas prices has decided to defer its decision. But that said, Mahanagar Gas and even Indraprastha Gas for that matter have stabilized after that hammering they took earlier during the year. In fact, both IGL and MGL, that's Mahanagar Gas, are among the prominent gainers this afternoon as we speak, and reasons are not hard to seek because to some extent the companies have been able to pass on higher gas prices to their customers. Secondly, the government has tweaked policy in such a way that at least companies that supply gas to the retail consumers don't get hurt so much by it, and it's generally felt that the government will continue to maintain that policy, and that is where companies into city gas distribution, they don't seem to face that much trouble as somebody like say a Gujarat Gas, which largely supplies to the industrial belt.
Yeah, I think Santo, clearly the resilience and the volume growth of Mahanagar and Indraprastha Gas has something that has taken even me by surprise. After the massive hike in domestic natural gas prices back in April, everybody expected that volume growth will subside from here on. You would see a big hit there, but clearly with the government maneuvering the policy in a way that it does not hurt the end consumer, city gas distribution companies have been able to get away with it to a large extent. Going ahead, of course, now with the deferment of the the change in administered natural gas prices that was supposed to be effective from October 1st, now that has been deferred. It will provide another period, at least some amount of period for city gas companies to benefit from the current mechanism. But I think in the future gas prices are going to go higher, so I would not be very confident if these companies can sustain the current level of performance that they have been showing so far.
Well, with that, a quick take on the market. Nifty is flattish at this point in time and again struggling to stay above the 17,000 mark. Bank stocks have been under pressure, CJ.
Yeah, yes, Santo. I think it's probably after that news of on the bond index inclusion that we have seen a little bit of a downtick on the Nifty Bank, largely because, of course, bond prices have been falling, and generally, if bond prices are lower on a quarter, you tend to face mark-to-market losses on your treasury holdings. So that is something that is really worrying the market. But if you look at other sectors, Santo, Nifty IT, which was probably supposed to be the biggest loser of the entire narrative around global recession, the Nifty IT is now higher by almost 1%, 1.1%, and second straight days of gain for that sector. Apart from that, Nifty Pharma is doing quite well, and Nifty Media also holding up quite strong in this market.
Well, and what are the key things that we have on the horizon, CJ?
Well, Santo, of course, the most crucial will be the speech from ECB's President Christine Lagarde later today. That will be something to watch out for. Apart from that, you have in the evening some economic data coming out in the US, such as the new home sales as well as consumer durable goods order. A good indicator of how the property market and the consumer sentiment is doing. So those will be two important data points. And of course, along with that, there are a couple of Fed members who will also be speaking later in the evening. So it will be very interesting to see what sort of commentary they have to offer in light of the sort of mayhem that we have seen in the global financial markets over the past three sessions.
Well, with that, we wrap up the session of Markets with Santo and CJ. Thanks for watching, and please do post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for SFA Financial News, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again tomorrow morning at 9 a.m. Till then, have a great day.